Well, thanks for joining us here on a Monday morning. I'm Marlon Bowling with you here on your Market Day Report. And we are going to take a look at how your grain and livestock markets are opening up today. Everything should be off and running right now. Let's dive right into some of these prices here and see what they are doing. We'll go with the grains first. And as we go to the big board, we'll take a look here at what's going on in the corn trade. As we look at our corn futures this morning, they are reflecting what happened overnight when we had a lot of weakness creep into the corn market here. We have the May corn currently trading 3 cents lower at $3.59 1/4 per bushel. That's toward the lower end of the trading range if you factor in the overnight trade. Looks like conditions are going to be opening up in the Midwest, so the planters will be able to get rolling here before too long. It's still kind of damp and cold in a lot of areas. I was talking with some folks in Illinois this morning, and they said they really need it to warm up and dry out a little bit. But with the favorable forecast for the next few days, they say that the planters and the tractors will be waiting on the edge of the field with the engines revved up out there. December corn is currently at $3.70 right now, just one tick off of its low of the overnight and morning range. We're down 4.5 cents per bushel. In the soybean trade, that has been a different story overnight. And in the soybeans, we have the May up 5 at 9.21 3/4 per bushel. July is up a nickel at 9.30. New crop November is up 4 at 9.34 3/4. Meanwhile, on the wheat trade, they're really getting hammered. Of course, they are getting some rain in parts of the southern plains where they really need it. Wow, look at July. Chicago wheat down 9 at 4.57 3/4 per bushel. If we look at Kansas City, there we have July currently down 12.5. They're really pounding that market down at 4.58 1/4. Minneapolis wheat on the spring wheat trade, we have July currently down 5 3/4 at 5.23 3/4. Let's bring in Dewey Strickler with AgWatch Market Advisors. He's from Franklin, Kentucky, and we'll bring him in here on the phone. Dewey, thanks for joining us here today. As we look at this market activity, is this a case where maybe the trade is thinking that now we can get the corn planted if conditions finally clear out in most of the Midwest, and that would be helpful to the soybeans where they thought a lot of those acres may have been shifted over to the soybeans, or what's driving this?
Well, I think you're partially right. The corn market being down because it looks like the weather is going to start to improve here. As far as the bean market is concerned, it's more deeper than that, Marlon. And the Commitment of Traders report here showed Friday, and you've got two types of funds. You have the trend following funds, and you have the index funds. Index funds are generally those funds that are invested like in ETFs and also the commodity indexes and so forth. Since the beginning of March, the index funds have built their position up to 770 million bushels of soybeans. This is the largest position they've had since July 2012. Shortly after that occurred, what you will probably see and what happened back then is that when they have a position on and say it outpaces the other positions that they have, they frequently reduce their exposure. This is what happened back in 2012. We saw the index funds dump about 220 million bushels of beans for a 23% price decline. In today's world, that will put November beans at 720.
Wow, that's quite a difference. Now, I do want to take a quick look at our cotton market because it did rally overnight. I want to see what the cotton is doing this morning as well. Of course, the wheat under pressure from the prospects of rain out there in the southern plains, but in the cotton market, right now we have July still 61 points higher. We're at 60.17 cents per pound. Here we are talking about heavy rains in cotton growing areas where they may have delayed planting once again. So we'll follow that market as well. We're talking with Dewey Strickler. He's with AgWatch Market Advisors, and we'll be back with more with Dewey in just 1 minute. Come on back. Back with you once again here on the Market Day Report. I'm Marlon Bowling with you. We're talking today with Dewey Strickler. He's with AgWatch Market Advisors in Franklin, Kentucky. We covered the grain side here. I wanted to talk with Dewey about this livestock market action. What a finish we had in the cattle market on Friday, and even the hog market. If you throw out that nearby April contract, everything was higher there as well. Looks like we're getting off to a firm start in the cattle complex here, Dewey. We'll take a look at our live cattle futures in the early going. Now, the cash cattle market did kind of support the futures trade late last week. Right now, June live cattle are trading 60 higher at 124.62 per hundredweight. August up 32 at 119.90. October now up 25 cents on the day. It looks like the nearbys are leading the charge. Feeder cattle trade, we'll switch over there. We have the May contract up 73 at 153.58 per hundredweight. And now you have your August contract 38 higher at 154.30. Again, the nearbys leading the charge higher. What do you make of that, Dewey?
Well, I think on the fat cattle, you can kind of put three things to it. One is that we're looking at some warmer weather here around the corner. That means better demand. Weights are lower, and you still got a pretty good sizable discount of the futures to the cash here. So I think you're seeing some evening up from that.
All right. So on the beef cutout values that we saw last Friday afternoon from USDA, even though the cash market held together relatively well, we couldn't get much traction out of the wholesale market. We had choice cuts up 18 cents at 214.80. Meanwhile, selects were down a little over half a dollar at 205.25. Is that something that you expect to maybe see that turn around now this week with the weather warming up nationwide?
I think we probably will, especially with the lower weights.
Okay, let's take a look at the lean hog side. As I mentioned, they had a pretty good finish on Friday afternoon, and now we can't seem to hang on to it. Now, we have just the exact opposite of what we had on the Friday close. April back then was lower. All the other months were higher. Now it's just completely reversed. We have April now 6 higher. And that one goes off the board this week, I might add. The May contract is down 37 cents at 76.35 right now. So that's on the low of the day so far. June is currently down 23 cents at 80.65 per hundredweight. About in the middle of the trading range here so far. But do you think that this is something where we're just looking at a sideways market trend in the lean hogs?
I think we could be looking at that, Marlon. We do have still a high premium of June cattle to cash. That's going to limit the movement up here in our hogs somewhat. I think June hogs will definitely get some resistance up here at about 82. And, yeah, we could be looking at a trading range for the intermediate term.
How do you think the cash hog market indicated a decent direction here in the future?
Well, I think you may see a little bit of pickup here, just like the cattle market. You get in some warmer temperatures, people will have a tendency to get out and want to do a little barbecuing.
All right, Dewey, thanks as always for weighing in this morning. Appreciate that. Hope you have a great trading week out there.
All right, thanks a lot.
You bet. Dewey Strickler with AgWatch Market Advisors. He's based in Franklin, Kentucky. They're off and running. Cattle higher today, hogs lower. They just can't seem to go the same way.
All right. Well, another week underway. We'll see how it rattles down.
You bet.
Okay. Thanks, Marlon.